I'm Anwyl of Dealbook for the New York Times, and what could be the largest IPO in history, GM is set to go public this week. Now, here with us with some analysis is Jeremy Anwyl. He's of Edmunds.com. Thanks again for joining us, Jeremy. So, talking about where the market is today, GM recently upped its offering. So, where is investor demand right now? How would you characterize that?
Well, it seems very, very strong, actually, and think about the events that have led up to this. When you're doing an IPO, it's very, very important that a company has a good story. They've got to get the fundamentals right. But there is a marketing element to this as well, and I think the GM roadshow teams, there's two of them, have done a good job in terms of orchestrating kind of a drumbeat of positive good news, really going back over the last couple months.
So it's really kind of the way they've sold it so far. But what about the actual operations of the company? They recently reported earnings, roughly $2 billion in profit, seem to be doing well in China. What do you think about GM as a company?
Well, those are two high points. The China sales are doing very, very well. They're also doing very, very well in Brazil. They've had surprisingly strong sales in October. The third quarter results were very positive. So there's been some great momentum in terms of the news that's been coming out. It's a little bit ironic. I think some of the things that are actually propelling them forward today were started under the chairmanship, the CEO Rick Wagner, particularly the global strategy, but then also this product turnaround. He hired Bob Lutz, and I think Bob deserves a lot of credit for some of the great vehicles that they've been introducing, really going back now quite a few years.
Yeah, Malcolm Gladwell recently talked about that in the New Yorker. Talking about the other side of this equation, now the government obviously has a big hand in General Motors today, and taxpayers want to know, will they actually be able to get a lot of their money back? Around $50 billion or so was put into GM.
Right.
So what do you think about the government's chances of actually making a decent dime off of this?
Well, that was very, very controversial, but I think when you look at the numbers today, the odds that the taxpayer will get reimbursed in full are actually looking brighter and brighter. So still a lot of risk. I mean, the car industry is incredibly competitive, and that's not going to change. But I think from what we're seeing with the IPO, that this initial offering will do a pretty good job in terms of getting the government stake down, and then over the next few years, with any luck at all, we should be able to get fully repaid.
Fully repaid, or maybe close, like 90% repaid?
I think, well, there's trade-offs here. So the government, I think, has a better chance of fully recouping the taxpayer investment if it's more patient. So if you're trying to liquidate the shares more quickly, that's going to put obviously downward pressure on the share price and could minimize the recovery. I don't see any big rush behind this. I think there was a bit of a rush to get the IPO out. Obviously that's going pretty well, but it's not like the government really needs the liquidity right now. It's not like they need the money. And I would urge caution, because I think if we're patient, we're more likely to get even a little bit of profit on the investment.
That's true. Now, looking further out into 2011, there's another IPO on the horizon, and that's the Chrysler IPO.
Yeah.
And a lot of people have said that this does seem to bode well for that IPO as well. What do you think this means for Chrysler?
Well, that's an interesting point, because one of the things I think that's helping GM right now is the fact that Ford shares have done very well, particularly since they announced and since GM announced the IPO. This has got to create a positive buzz, a positive halo around a potential Chrysler IPO as well. But truthfully, the work to be done at Chrysler is still pretty extensive. They've done a great job of cutting costs. They're just introducing some new product into the marketplace. But I think, as we're seeing with GM, at the end of the day, a turnaround has to be propelled by top-line growth as well as just managing costs, and that's still a sort of an unfinished story at Chrysler.
Yeah, and stepping back, you just mentioned the name Ford, and Ford has done fairly well. I mean, they were able to weather the recession better than their peers in Detroit. So how would you say GM is stacked up against Ford right now?
Well, Ford is really further along, I think, in the turnaround. I'd have to say they really got very, very lucky by raising a lot of liquidity back when liquidity was easy to raise, really before the financial meltdown. That's held them in good stead through the downturn. But they've also had now a pretty consistent, pretty stable management team, really led by Alan Mulally, and they've been executing to the same plan flawlessly for about 4 to 5 years. So they've just had a lot more time for the turnaround plan to kick in and to bear fruit. So with GM, we're about a year into that process. We've got a new CEO, but the next level down management team's been in place for a little while. And it's that stability, I think, with Ford that's really been helping them.
Yeah, so stability in Ford and more stability, hopefully with GM and Chrysler as you see it. Thanks so much for joining us, Jeremy. Once again, that was Jeremy Anwyl of Edmunds.com. I'm Evelyn Risley of Dealbook for the New York Times.